Good morning and welcome to day 2 of the 2018 Sloan Sports Analytics Conference. My name is Frank Rinaldi and I'm a first-year MBA student at MIT Sloan, and it is my privilege to present today's panel, The Nuts and Bolts of Acquiring a Franchise. Our distinguished panelists from my left are Raphael Stone, General Counsel of the Houston Rockets, Joseph McNulty, tax partner at FFO, George Pistolos, CEO and President of the Pistolos Group, and our moderator today is Michelle Steele, reporter at ESPN.
Yep, correct.
The panel will run for 40 minutes with an additional 5 minutes for Q&A. If you have questions for the audience, please submit them via Twitter utilizing the hashtag acquiring a team. Towards the end of the panel, the moderator will select the top questions for the panelists. And with that, I'll turn it over to Michelle. Thank you.
Thanks so much, Frank. I'm thrilled to be here. Before I started at ESPN about 6 years ago, I had spent about 4 years at Bloomberg News. And there I was covering a mix of kind of everything, general assignment related to business and the markets. And then I shifted into sports. But sports business was certainly a focus of mine there, and it continues to be an interest. So I'm so happy that we have the murderer's row of guys that know about this subject, the ins and outs of acquiring a franchise. So first off, congratulations to the Rockets' new owner, $2.2 billion. This is not him.
Definitely not him, no.
What is driving the kinds of prices that we are seeing right now, not just for NBA teams, but teams writ large? Just eye-popping figures. I mean, certainly $2.2 billion is a healthy number, and it's a great team, great players, good stadium situations. But essentially, what is the biggest factor in driving the valuations that we're seeing right now?
I mean, I think it's scarcity, right? So at the end of the day, there's only 30, and or at least NBA franchises. And if you expand that out to, football, okay, now we're at 62, and then maybe that's it, or maybe baseball and maybe hockey. It all depends on one's personal aesthetic. But yeah, I think scarcity is the single biggest driver of prices, yeah.
How much does buyer demand fit into this equation? I read a report from UBS recently saying the total wealth of the world's billionaires grew by 17% last year to $6 trillion.
I think that that's the other half of the equation. So if you look at just the value of the U.S. equity markets, for example, which is a good index for all assets in the United States, and you look at second quarter of 2009, the S&P 500 was at about 700. And so recently the S&P 500 has been, close to 3 or 4 times that. So most assets in the United States in 2018 are worth about 3 or 4 times what they were worth in 2009. And in other asset classes, people can make more of those assets. But like Raphael was saying, they're not making more NBA teams. They're not making more NFL teams. And so that combination of more wealth, I think the demand was there in 2009, but now there's a lot more wealth among the people that are interested in entering sports. And there's not more sports teams. And then the other aspect of that is that the average holding period is a long time. Les had the Rockets for 24 years, and that's typical. 15 to 20 years would be a typical holding period. And for many families, once they buy the team, it really never leaves the family.
And it's unlike buying a generic business that makes widgets per se. You're not expecting an ROI necessarily, right? When you buy a sports team, you're expecting to maybe make your money back when you then sell that asset. But then there are tax things, right, Joe? There are sort of some tax tricks, let's say, that make that a more reasonable investment.
Yeah, if you were to buy a sports franchise and absent any EBITDA whatsoever, it was zero EBITDA, you would get because of the amortization of the purchase price, and that you basically get a 6.6% deduction of the amortization of the purchase price. So if you had no EBITDA and you'd had nothing but amortization, you would get a 3.3% rate of return on your money just in the tax benefits, which is good because you're using tax dollars to appreciate a sports franchise.
So the person on this panel who has recently gone through a sports team sale, obviously, Rafael, could you take us a little bit inside for you what it was like on a human level, actually, finding out, you know, at 9 in the morning that the team was for sale and you're general counsel for that team? Well, what did you then have to do? I mean, I imagine at that point you had a lot of work on your desk.
Freak out, get my resume ready. Yeah,
Update your LinkedIn.
What's that?
Update your LinkedIn.
Exactly.
Yeah.
Yeah. So I mean, yeah, it was weird, right? And definitely this one was weird because and George knows Leslie well too, but the assumption was that he probably was not going to sell, certainly not in this time frame, and then he changed his mind, as obviously is his right, and then he wanted to move extremely quickly, which we did. So it was personally unnerving. George actually hired me a long time ago. I'm old. But I have an M&A background, so this is a really fun transaction for me. I love sports. I love M&A. This is kind of the best of both worlds, except that I'm selling. I phrase it as I'm selling myself, right? Like that's so not fun. So that was, you know, it was a little different, but you know, we settled into it. We got it done, and it's a cool transaction. It's not a hard. In the scheme of things, I've sold companies that were difficult to sell. This was not one.
What made it relatively easy?
Yeah, I mean,
Or
we literally, you know, so one problem you have, you know, when you're trying to sell an asset is you have to find buyers, right? And you know, there's oftentimes a list of strategic buyers, but you know, there's the negotiation, and you know, do you hire an investment bank, and do you actually want to put yourself for sale because maybe they'll think you're hurting, blah, blah. There's all these dynamics. We just held a press conference and said, we're for sale, and then when we started getting inbound calls, we said the number starts with a 2, and everybody just believed us. It was super easy because it was true. It was, you know, we had, it's scarcity. We had this asset. We knew what it was valued at. We knew it was going to be a lot. We knew there were going to be plenty of buyers. And to Leslie's credit, he was very focused on finding a buyer who was bringing more than just money to the table, which is how we ended up with Tillman. And yeah, and so from that perspective, it was just a very, very easy transaction because, you know, everybody on every side was super motivated.
I know that in the NFL, you need to have quite a bit of money liquid to put down right away. The structure rules in the NFL really limits the pool of buyers. I think it's 30%, and you can't finance too much debt. How does those structure rules sort of compare across leagues?
Do you want to take this one, or you want me to take it?
I don't want to take this one. Go ahead.
That's fine. I'm happy to take it. So there is a rule that limits the amount of money that you can pledge against an NBA franchise, and the current cap is $250 million. And the NFL has a similar regime that limits debt strictly to a fixed number. And so if you're looking at a $2.2 billion purchase price, that means that you know, subtract 250 million from 2.2 billion, and you get 1.95 billion dollars. And that means that the equity that you have to bring to the transaction is 1.95 billion dollars. And for those of you who have studied finance or worked in finance, that's a very unusual debt to equity ratio, which is an understatement. So it'd be much more typical for you to see a 50-50 ratio of debt to equity. So maybe 1.1 billion in another asset class. For a $2.2 billion purchase price, it might be half debt and half equity. So, but the leagues do that because they want to make sure that when people are coming in, they have the resources to run the franchise in a first-class manner over time. Because, you know, Tillman's probably going to own this asset for the rest of his life, or whoever bought it. and maybe his family. And so the league wants to make sure they're getting people coming in that are very strong that can maintain the assets. So even though $2.2 billion sounds like a very high price, it's actually limited in part by that limit on the debt.
Why do you think, I mean, this ties a little bit back to that first question, $2.2 billion for an NBA franchise. You're starting to talk about NFL valuations. Are we seeing convergence in terms of NBA teams and NFL teams?
Well, we'll see. I mean, we need to see what happens with the Panthers.
I don't know, it'll be interesting.
Yep.
How would you value the Panthers, George?
Very highly.
Does the number start with a 3?
That's a great question, but I do think it'll be a record price. I mean, the people were commenting on the Rockets price, and how long was the Nets announcement after the Rockets transaction closed?
I don't think they've even technically announced yet. It's just things have leaked. So, yeah, I don't know.
Okay.
It's out there, though, and I think it's 2-3.
So shortly after, Rafael delivered that great transaction for less. One of those other ultra high net worth individuals from Asia, Joe Tsai, who's associated with Alibaba, it's rumored, negotiated an agreement to purchase an interest in the Nets at a $2.3 billion valuation. So the Rockets' record, it seems like it's pending an announcement related to the Nets. I think that you can safely say that Panthers will sell for more than that.
George, you've worked on a lot of these deals and continue to consult with people who are interested in buying, who are interested in selling. Is owning a team a good financial investment? Or is it something you should do if you have plenty of money and just want to have fun?
Well, I think it worked out very well for Mr. Alexander, for example, who bought the team for $75 million and sold the team for $2.2 billion. And we have a bunch of data-oriented people in the room, and so, how can you add value to this process? And one of the ways is maybe looking at the history of sports ownership and what the returns have done, and that's something our company has done. And it tends to outpace the performance of asset values in general for public equities. So sports tends to grow faster than public equities. I mean, the U.S., as long as the U.S. is a good market, I think sports franchises are just going to continue to be getting more valuable. And I guarantee you, maybe Rafael could answer for Tillman, but my guess would be he's probably looking to make the Rockets even better and more valuable.
Yeah, for sure. I mean, he's the second we closed, he was walking the building, looking at areas that he could improve and reinvest in and do everything else. And I agree with him, but he's extraordinarily confident that he made a fantastic investment. Like if someone came to him today and offered the same amount that he paid, he would die laughing, and there's no chance he would do it. Both because I think the sheer amount of happiness that he's enjoyed has even overwhelmed his expectations. He had high expectations, and I think they've been more than met. And not just because, I mean, obviously we're off to a very good start this season. I don't think it's just that. I think really the intangibles of owning a team are very hard to understand until you really have it. And he's been extraordinarily pleased from everything that I can tell. But then also I think, I literally think the team is worth substantially more now than it was 6 months ago.
How long did it take, by the way, between Tillman first approaching you guys and then you having the time to do your due diligence and close the deal?
I mean, I think we announced July 17th, and we closed October 6th or something like that.
Is that quick? Is that
That is by far and away the
relatively
fastest
sudden?
transaction that's ever been done. I think the Clippers was the next fastest at double that amount of time.
And why did he beat out everyone else?
Because Leslie wanted a fair price, right? And so a lot of that was kind of what's a fair price, and we gave him some feedback, and we thought that we got that. And then he wanted local ownership, that was really important. He wanted passionate ownership, that was really important. And and nobody in the world wanted this asset like the Fertitta family did. Tillman has a very long history. He's a Houston guy. He was a minority owner in the group that Leslie purchased from way back in the day, which I think really helped because I think it gave him a personal connection to it that meant he paid attention to the Rockets, not just as a fan of basketball, but as a business the entire time Leslie owned it. And so when the team was announced for sale, there's a limited category of people who have the ability to do the transaction. They've got to do their diligence. I believe, from what he's told me, Tillman felt he had to do no diligence. I know this. I know what it's worth. And the second it got announced, he did have to figure out how to pay for it, right? Because very, very few people have actually that amount of liquid wealth, on day one. So he immediately went out and figured out how he was going to get liquid enough to do it. And then his first phone call to us was maybe 2 weeks later, and he was already had the plan. So it was like, here's what I will do. I'm going to do, step 1 and step 2, and then I'm done. And it was very easy. It was very turnkey for him. We didn't do a formal auction. I don't think I think most of the time that would be a mistake, at least in this type of circumstance, because your potential buyer group doesn't want to be embarrassed. And so you do have to be careful that you don't limit yourself by setting up a process that they don't want to participate in. So we didn't do it that way. We said, we think this is a fair price. We had multiple people who were willing to do it, and then we closed with the right person.
Joe, I know that you were involved with the Celtics being sold in the early 2000s. How does that compare? Listening to Rafael speak a little bit about his experience just so recently, how does that compare with the sale of the Celtics?
One of the things mentioned is that everybody's saying, well, how do you come up with so much cash? How much one individual could come up with so much cash? And sometimes, I don't know the Rocket transaction per se, but what we do see is when someone comes to acquire a sports franchise, they syndicate it. And what they do is they'll form an LLC and they'll get 20 of their BFFs and they'll come up and raise the money and put into a syndicate. And so you'll have one guy who's kind of the general partner in the deal who's going to raise money from a lot of limited partners. And the limited partners have status based on how much they're going to invest. But I've seen transactions where a gentleman was going to buy a sports franchise and he literally made 10 phone calls and raised $1 billion on the phone. And it comes from 10 people, and we run a multifamily office at FFO, and we probably have 15 to 20 billionaires in our office. And I would say out of those, maybe 12 would like to buy a sports franchise. Okay, you even see young entrepreneurs that come in and say, well, if you're about to launch, about to go public, and then they'll say to me is, when can I buy the Chicago Cubs? Okay, because it's everyone's dream. So you get this syndicate, and young people will put one foot in and be a limited partner. We've seen it with the Celtics. With Joe Lacob was once a part of the Celtics. It went on. You saw Ronda Vandevai was part of the Warrior Group. He went on to buy the Sacramento. So we're seeing a lot of people seeing that if you come in as a limited partner or non-managing partner, then it may be a gateway to step into be the guy that's going to run the franchise on another.
How do those consortiums come together? We saw it with the Marlins consortium sort of bidding against each other. Is it just a guy calling up his friends?
I think Joe makes a great point, which is one of my favorites, and Rafael made the same point really too. With Tillman, you have someone who had been in a limited partnership before, and so these are private companies, and so to get an insight into how one of these operates, often it's someone who actually has made an investment and been part of a syndicate and then decides that they want to come back and they want to, in Tillman's case, he bought 100% of the franchise. And certainly if you're the seller, you love to have somebody at the door that said, I've got all the money and I don't need to call anybody. But often it is a group. Joe mentioned Joe Lacob, who went from the Celtics to the Warriors, from being a limited partner in the Celtics to being a controlling owner of the Warriors, and then Vivek Ranadive went from being a limited partner in the Warriors to being the controlling partner of the Sacramento Kings. Clay Bennett went from being a limited partner in the San Antonio Spurs to being the controlling partner of the Oklahoma City Thunder. Michael Jordan went from being a limited partner in the Charlotte franchise to being the controlling partner of the Charlotte franchise. You know, so it's almost kind of an apprenticeship. And there are other examples too, but it's often something that you see when there is a syndication, because there's somebody there who's done it before, maybe not in the same role, but they've done it before, they know the league knows them, and so maybe it's easier for them to convince other people to participate in a group to purchase a franchise, and maybe they have a plan on what they're going to do. And that's something that, you know, people like, that's something where really that's kind of the topic of this panel in some ways, because the nuts and bolts of these acquisitions, I mean, you need to talk to Joe, you need to understand what's going to happen from a tax standpoint. If I'm a limited partner or the controlling partner in this venture, how can I structure it in a way that's efficient? You know, because one of these, a rich person problem is taxes. And to some extent, sports, you know, has found a way to solve some of that pain by providing some benefits. And, you know, Joe talked about that earlier. But also bringing a group like that together, you can use some help on, you know, how could the franchise improve? You know, and that's something that, that my company does.
And how does the stadium or the arena sort of factor into the overall valuation of the team? With the Clippers, it didn't seem to as much because, you know, they're sort of the third priority for that arena. But for the Rockets, I'm sure it did factor in.
Yeah, I mean, the Rockets are, well, you know, I'm self-interested, but, you know, as is George, actually. You should take pride in this. But yeah, no, I think we certainly build ourselves and we view ourselves as kind of a unique sale. I mean, generally when franchises sell, they're distressed in some way. They're distressed on the court. They're distressed off the court. There's an ownership struggle, a management struggle. They're poorly managed in some way, shape, or form. Our view certainly was we were not. And one of the key elements to the success of the franchise is Toyota Center and the city of Houston generally. And you know, Houston's an enormous market. It's growing at a really fast pace. It's only got one NBA team, unlike LA and New York, right? So it's about the same size as Chicago, and you know, and I guess Milwaukee, San Antonio, about the same distance. But yeah, I mean, it's a great market. It's a great building. The control of the building, the building's owned by the Sports Authority, which is a local municipality, but the control of the building went with the sale of the team. And yeah, it's a super important part of the story. And again, like, Tillman knew what he was buying. So, you know, he felt really, really, really good about it.
George, you know, you were clearly instrumental in that Toyota Stadium deal. What goes into winning the support of a stadium from the community? Because it tends to be a controversial subject, and what challenges do you face in that area?
It's all about, it was really a decision that the city has to make about how they want to develop their future. And in Houston, we had good fortune where business leaders got together and they kind of put a plan in place to finance stadium development around visitors taxes. And so hotel tax, if you guys are staying at the Westin, you're paying a hotel tax there. So people who live in Boston don't generally check into the Westin and pay that tax. So it's a little bit easier to finance sports and entertainment projects using visitors taxes on short-term car rentals and hotel taxes. That was the plan in Houston. And they were able to raise enough money to build NRG Stadium, Minute Maid Park, and Toyota Center. And so we benefited from that at that time. So that structure was set up, and then we had to win an election, and we actually, Rafael can't take blame for this, but it took 2 times. And so right when I became CEO of the Rockets, we were able to negotiate an agreement, but then we lost at the ballot box. And, the owner had to make a decision about whether he wanted to stay in Houston and try and work things out. And people in Houston had to make a decision about whether they wanted to help him do that. And fortunately for the Pastolis family, everybody came together and decided to try again. And the second time around, this is '99, we were able to get a referendum passed to develop Toyota Center, which opened in 2003. And what Les and Rafael and their colleagues have done is really keep that building being one of the top buildings in the NBA, even 15 years later. And it's an incredible asset. And what Rafael said was absolutely the opinion of everybody in the world, which is that it's very hard to improve on the Rockets. And it's a very unusual situation where you have such a well-managed asset. So Tillman is stepping into, it's really, I can't think of another instance. There may be one. Joe may be able to think of one. But I can't think of another instance where everything was going so well and somebody decided to sell their team. And so usually the only reason someone would sell a team is because they have to, because these guys love owning teams. So I think it was a very unique situation and really great for the NBA.
Was there already, there had to have already been, even before Leslie decided to put the team up for sale, there had to have already been an interested sort of, or a list of people who would have been interested, a short list of people that would have been interested in an NBA franchise. Who has, does that exist? I mean, the league must have.
They sit courtside at our game.
Yeah, right.
That's where you.
That's the list. That's the short list.
That is literally where you start for sure. And then there are people who have relationships like we talked about, pre-existing relationships with the NBA, who've made it known that hey, if a team comes up, we'd like to be interested. Those are the two categories of shortlist.
When the other thing is Les is he's very clever because the way that he made the announcement, I remember Adam saying, the commissioner of the NBA saying, now everyone in the world knows that the Rockets are for sale because one of the ways you're in the news business, I mean, when you surprise people and it's a big surprise, it's a much bigger story.
Yeah.
And,
It's a story that has legs because people are wondering what happened.
Exactly. And so, but everybody knew. So everybody in the world knew the Rockets were for sale. And at the time, we were in China talking to people, or in Asia talking to people about the NBA as an investment opportunity. And everyone that we met with was their primary interest was really in the Rockets. And everyone was talking about it in 7 different countries in Asia, and I think that's unusual. I mean, and the only comparison to that really is when the Clippers sale happened and Adam took action to force a sale, and so everyone knew that there was going to be a sale and it was going to happen on a short time frame, and it resulted in a very good outcome, even though it wasn't the outcome that the owner desired. And I think, I don't know whether Les was taking notes, but I think he was able to kind of create the same kind of situation where everybody was shocked and they immediately were calling Rafael. And like he said, I mean, this is about as successful a process as we've seen in our industry.
I'm going to spend the last few minutes that we have answering some asking some questions from the crowd, and if you have any, you can send it using the Twitter hashtag for this panel. We talked a little bit about debt earlier. What would team valuations be like without debt limitations?
More. Yeah, I mean, NBA, NFL, they're all different, but it would. I do think it would have been significantly more. Yeah, like.
I think it would have taken longer, significantly longer.
No, we could have got it. No, and we could have got the transaction done for more in the same time frame, materially more in the same time frame. Just because, and it would have. I think Tillman would still own the team. I mean, I don't think that would have changed, but I do think that what would have happened is generally we would have asked for more, and the same people would have been interested, and he still would have come out on top. I don't know what more means, if it's 50 million or 500 million, but it's definitely more.
And I would just say the other side of that would be if you're the league, whether it's the NBA or the NFL, yes, you want to grow franchise value, but the other thing that you want is stability. And by keeping the debt limits artificially low, it's a balance you have to strike, but you're safer, because people are coming in with much less debt, and it's much less likely that they're going to have bumps in the road later on. And when you allow a lot of leverage, you do run into some challenges in other businesses. And so if you have 29 other partners, yes, they want less to get a good price for the team, but they're also highly interested in getting someone well qualified with a stable financial structure, in the new franchise. And even though I completely agree with Rafael that the price would have been materially higher if there weren't debt limits, and the debt limits in the NBA are probably headed up.
Yeah.
And so, but I don't know when that's going to happen.
You think they'd loosen those rules up a little bit?
I think so. Rafael, I don't know what he can say, but he probably has a little better insight into this than I do, or more current. But
I think George is right, but again, that's going back to the point that Tillman's a really smart man. He factored that in. He knew what he was buying, and so he knew that there was this artificial constraint. There's a good guess that the artificial constraint is going to change within the time he's going to own it. The second it changes, he took all that appreciation.
Have the structure rules always been this way, George, or were they tightened up because the NBA was burned at one point or another, or just a precautionary measure on their part? I guess I'm asking this question because I recently saw rewatched the 30 for 30 Big Shot with John Spano, and I was just completely flabbergasted by some of the hijinks that he had pulled. I don't know if you guys are familiar with it. If you're not, everyone in this room who's interested in this subject should probably see it, at least from like a comedic aspect. I think that my favorite scene was when, you're smiling, maybe you saw it, George, but like the NHL was meeting with him, with John and the seller, and they were celebrating the sale, and the check came, and it just sat on the table. It just sat on the table, and the guys from the league were like side-eyeing each other, thinking like, does this guy have $165 million? Because he's not picking up the tab. Yeah.
And apparently not.
Yeah, that's a tell. That's a tell. We were talking a little bit about proof of funds backstage. I think that proof of funds includes picking up the tab for just about everything when you're buying a team.
One point I want to make is, especially when you see a sports franchise, you say, and we're talking inside debt, means secured debt, the NBA allowable debt. But when a buyer is out trying to roar up the money to buy a sports franchise, and if he owns other businesses, you'll see them getting outside leverage, meaning leveraging their own assets to get cash and liquidity in order to buy the franchise. So I'm not totally in agreement that the debt at the entity level would really substantially increase. It may minorly, but I think people go out when they want to buy it and they want it, they're going to find any way in their asset base to get the money to buy it.
It's a fair point, and I think we're dealing with a hypothetical to some extent. I mean, just to address Michelle's first question, and I think this kind of ties together what Rafael said about where it's likely headed. I believe that the rule 20 years ago was when I mentioned asset values in the U.S. were much lower and franchise values in the NBA were much lower. The debt limit was $150 million with $25 million holdco loan, so $175 million total with some structuring, and so it hasn't changed proportionally with the increase in franchise values, and probably the bigger driver is just national TV is so much higher than it was 15 or 20 years ago, and that's what really drives the capacity of the teams to borrow very inexpensively. And so I think Rafael's I think Joe's point is a good counterpoint, but I think debt limits are headed higher, and I do think franchise values will be materially higher. That's my opinion. I think that's probably going to happen. I think Tillman is going to benefit for that, and every owner in the NBA that except those that view it as a legacy asset.
There might be an interested buyer in the audience today. What is the entry-level price tag for a limited ownership stake?
Please
The
see
price
me
of
to the
admission.
left after the panel and Joe. Rafael's already gainfully employed, but Joe and I are always looking for the next buyer. You want to take Michelle's?
Well, you're, and I'll say the NBA, I don't know the actual number, but they've now put a limit on the number of limited partners. So you have to have this pool. And, we've seen people come in for $500,000 in some syndicates, but there's other people that have to make it up because you only have a certain amount of limited partners that could be according to the league's restriction. But I think you want someone that's strategic if they're coming in for a lower amount. What we've seen in some of the syndications is you have levels of ownership. So if you're a large investor and putting up, in excess of $20 million, you're going to get floor seats, okay, and more privileges to the owner club and maybe a board seat on the company. If you're $1 million investment, you have to buy your own ticket and you got to sit in the middle, and so there becomes a hierarchy in it, and you'll see people with those intangibles wanting to invest more to have those intangibles because they want to be seen. If you're going to be in a major city and you're a player in that city, you want to be courtside. So you'll pay a little bit more and you'll invest a little bit more. But we've seen as little as $500,000 in some of the syndicates in the last
And
10,
you're
15
buying your own
years.
ticket in that case.
And then you have to buy your own ticket.
I think it's a great topic, and that is a big explanation of the history. I think the future is going to be a little different. I mean, the cap at 25 owners in the NBA is relatively recent, and so transactions don't happen that often. Because people hold these teams for long periods of time, there aren't that many of them. And then sometimes there's no limited partners at all, like with Tillman. So for teams that, 1/25th of a team is 4%. And so if you're doing one of these transactions, what we have seen recently in the market for LP interests is that cap is kicking in, and owners don't want to sell small stakes because it limits their flexibility going forward. And a bunch of teams that participated in the deals that Joe's describing are already over the cap. And so for those teams, they actually can't add anybody to their mix. The most that they can do, they're grandfathered in, and they can replace someone who's an existing investor in the team. And I think, the only other thing I would say about that topic is we mentioned earlier that it's a good way to start, right? As an LP, most of the last 10 guys to become GPs were LPs before they became GPs. Joe Tsai is another example, right? Because he's going to be an LP first, and then maybe over a 4-year period, he'll get a chance to become a GP. But that a lot of the action is actually in the syndicates. And it's in the syndicates when the team is being purchased, and then, people's interests change over time, and so then there's, people need to get out, and so you can get in actually, even if a team isn't selling the way the Rockets did, with control changing, there's an opportunity for somebody to come into maybe an existing franchise with a smaller piece, get to know the business, get to know the industry, become part of the NBA family, and then maybe have another opportunity down the line. And so that's something that we see across the industry. Same thing in the NFL and Major League Baseball with very few control transactions. And so sometimes the action is, in the aftermarket for the LP interests.
We talked a little bit about NBA valuations and NFL valuations appearing to be converging somewhat. What sports league, domestic or international, are you most bullish on in terms of team valuations?
Esports.
That's what everyone's saying. All the cool
I'm
kids.
invested in the esports team.
Are you really?
Yes, I am.
What's your team?
Clutch Gaming and League of Legends. We'll play today at 5 o'clock. Root us on. Go Clutch Gaming.
Okay. And you see yourself doubling the investment?
Oh, I have no idea.
Tripling it?
I think it's really interesting. I'm super long on esports. The eyeballs are already there. I think it's undervalued because anybody my age doesn't get it. whereas people who are 20 do, and that creates some weird valuation dynamics. Having said that, on a more traditional basis, I'm also super long on soccer. I think soccer I think now that commercials are no longer an important part of monetizing your viewing rights, I think that soccer has a real future in the U.S. Starting 5-6 years ago. I think MLS is interesting. I don't know where it goes. I don't know if that's the it seems the most likely vehicle. I don't know, but I think soccer is going to really appreciate too.
Soccer and esports. Joe, what do you think?
Well, I'm going to go out on a limb and say that I believe that the NBA is going to go berserk. I think that there's teams currently that are worth $3.5 billion. I think you take 4 or 5 teams, I think they could justify even an EBITDA of that number. I think the world market loves the NBA. I think it's going to go world. I think if like the announcement in Mexico City, I think a team in Mexico City will increase the audience base. It's a world league, and it will continue to do the world league.
I agree with that too, but she said I couldn't pick the NBA.
I didn't say you could.
I thought you said besides the NBA and NFL.
No.
Oh, I misunderstood the question. NBA first, then esports, then soccer. Sorry.
I said domestic or international. Are you most bullish?
I just want to get my 2 cents on this one and just say I like the 5 major leagues, and I like especially the big brands in each of those leagues. I think they all have plenty of runway in front of them. They're all interesting content businesses. They're really important to media properties, and I think that's likely to continue, and I think it's a similar story, especially for the big brands in the 5 major sports. I think esports is very interesting too, and I wish Rafael good luck with his investment there. I think it's how to play it. I think is still kind of playing out, but I think it's a smart place to spend time, for all of you thinking about how you invest your personal capital to learn something about it, because it is big and it is growing fast, but it's not clear yet to me, where the real value is going to be concentrated, except for in the publishers.
Yeah.
And so where's the team play going to be, I think, is the question. But if you're in the sports business already, like all of us are, you got to be spending some time on esports.
Will you help people buy esports teams?
I'm sure that will become a business at some point in the future. But as you see, really for a transaction of that size, most of these organizations are already more than sophisticated enough to handle an investment in that sort of $5 million to $20 million range. Rafael they just did a $2.2 billion transaction. So if they want to invest in esports, they have the capabilities. I see my friends at the 76ers are here. Same thing there. They have all the capabilities internally to handle a platform like that. If you're talking about investments that owners that are already in sports are making, they have the capabilities internally to do it. The difference for somebody who's coming into a league for the first time is they don't have all those smart people already working for them. They're going to have that team in the future, but when they're coming in, a lot of times they have no experience in the industry. So that's where they tend to lean more on advisors.
We are out of time. Thank you so much to the entire panel. And if you do want to buy a team, George and Joe will be to the left.
Thank you, Michelle.
Thank you so much.